Hello friends, Wall Street is not happy with Netflix first quarter 2022 earnings. How do we know? See this post-market share price chart for Netflix. You see that it came down from 348.6 USD to around 258 USD, which is around 26% down from the closing price on 19 April 2022. So what causes this to happen? Quick look shows that the headline growth in terms of membership is worrying as the global streaming paid members decreased by 0.2 million to around 221.64 million. Is that a sign of increasing competition? Is this really worrying? Let's dig into the 1Q2022 earnings results and analyze what happened. US and Canada paid members decreased by around 0.64 million as compared to last quarter 4Q2021 results, though maintain a positive 41 million increase compared to 4Q. It's still a positive, but the decrease in paid membership for Netflix in US and Canada does signal a bit of worrying development. With the average revenue per membership being the highest among all the regions like EMEA, Africa, and APAC, and compare that to US and Canada, it has the highest membership fee being 14.91 USD in US and Canada. It certainly make market participants a big concern. But if we exclude the 0.7 million Russian accounts, there's actually an increase of 0.5 million increase in accounts for Netflix on a group basis that if we include EMEA, include Africa, and include APAC. Most of the account increase that offset the decrease in Russian accounts and US and Canada accounts is the increase from APAC, which saw 1 million net increase in accounts. EMEA, being Europe, Middle East, and Africa, also have recorded a 0.4 million increase in membership, if not for the cancellation of 0.7 million Russian accounts. APAC strength in terms of membership increase did come at the expense of lower revenue per membership. You will see that it's below 10 USD as compared to US and Canada revenue per membership, which is close to 15 USD. All in all, market participants are worrying if Netflix is facing increasing competition from other subscription video on demand like Hulu, Disney. So this could explain why Netflix share price plunging so much in post-market. The management have nevertheless mentioned that there's 100 million of untapped users who will be using Netflix pay accounts but did not pay a single dollar. Another model that Netflix is toying right now is having a lower membership fee model that comes with advertisement. Maybe this could be applicable to APAC and Latin America in this kind of markets where their revenue per membership is lower. But we do note that all approaches in terms of monetization and business ideas, product use cases, all takes time. Given Netflix brand name and a free cash flow of almost 800 million in 1Q2022, I believe there's still a decent portion of market participants who still like Netflix. Guidance for 2Q2022 for Netflix is that its 2Q2022 revenue is still likely to increase from mid to high single-digit growth, which is a positive sign. Why is this the case? Because this is despite an expectation of negative net addition of membership, because they do always see a decrease in membership in 2Q. Based on my thought process, as well as looking at the financials and the discussion highlighted at earnings result, I do think there's a slight overreaction in post-market for the share price of Netflix. Given the slight return of optimism back to US big tech, I think Nasdaq 100 may find strength back above 14,250 and thereby bringing to a stabilization of share price for Netflix. I do not think it will close below 250 USD in near term as long as Nasdaq 100 can find strength back above 14,250. But if Nasdaq 100 breaks below 13,800, then it may just mean that Netflix may potentially break 250 USD. We have to watch the market conditions as well as Netflix going forward in terms of how they will perform for 2Q and 3Q and 4Q before we make other reassessment. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. As always, this should not be construed as any investment or trading advice. Thank you.